Hey, what's up, everyone? Welcome to our weekly chart breakdown. So, we're going to be going over what we're going to be looking for the week, what we could possibly expect. Now, if you know me, the only instrument that I trade is gold, so XAU USD. And when I do trade it, I'm trading in the futures market under micro gold contracts. Now, there's some other things you're going to see I have on watch. I've been checking out silver this past 2 weeks to see how the market is on that. Something I look at every single week is the dollar. And then also I check out US 30, NAS, Bitcoin, Ethereum. Those are things that I love to look at. Now, apart from just gold, I do longer term stuff. So I have ETFs and stocks that I look at. And I use the exact same method, the way that I'm going to show you how I'm doing a top-down analysis of gold. I do the exact same top-down analysis whenever I go to check out any other market. So the application stays the same, and we just rinse and repeat the process. So on gold, obviously we are in a bullish trend. We've been bullish. Now, inside of your larger term trends, you're seeing me start off on our weekly time frame, right? So on the higher time frame, we're still bullish. And then when we drop down into our daily, obviously it's going to stay the same. What I'm going to start to look for is if there's going to be any shorts this week. I'm curious to see if we get any shorts inside the market this week. I'd love to see that, but the market does not have to give us any shorts. So let's go ahead and crack this thing open. Now, the first thing that I've spotted on this chart is we had a beautiful, beautiful, beautiful flag here, like so, before price continued to push higher, into which it gave us a flag here, like this, another one here, here, came down, grabbed liquidity, kind of made like this triangle, I guess you would say, and then price continues to push higher. Now, what I'm paying attention to whenever I come to trade inside of a market is how price is moving, right? So one of the common questions I'm asking is, how did price reach this area before giving us the move? All right, so this is a question like I'm always keeping in mind, is how is price getting there? So what I'm noticing is this whole move up was very corrective. It wasn't these huge candles like we're seeing there. Price was super corrective when it was reaching this top before we got this last engulfing candle on our daily. So today's Sunday, so we're going to be looking at Asia session Sunday. I'm popping down to my 4-hour, and now you can see that corrective price action a lot clearer. And now, what's the difference between corrective price action versus impulsive? Well, pretty simple. This is impulsive price action, and then this right here would be labeled corrective. So it's hard to kind of make this fit all inside of this, but yeah, this is all considered corrective price action. You're having a lot more smaller candles. The big moves aren't as relevant, right? So we had a lot bigger moves moving up to this. Just like this little area, we had some corrective price action moving up like so into this spot. That was all corrective price action before we got an impulse down. So same thing here. I was just monitoring our corrective price action. And now, once I've spotted and kind of identified our corrective price action, I'm going to be looking at to see if there's any trends or patterns that I'm identifying. So here's a beautiful trend line. And then there's another good one right there. So we're going to see if we get some downside movement to here, right? So price never moves that straightforward in a market. It doesn't just drop all of a sudden all the way down here. Kind of cool if it did. But the chances of that are way less likely. So what I'm going to be looking for is to see if, one, how we break this little area over here. Actually, it's going to be this area. I'm going to see how price gets to here. If it pushes back up and then goes higher and then does the same thing. So it gives us like a much more drawn out flag before continuing upwards. All right, so price doesn't have to continue to push down. So that's something I'm going to keep in the back of my mind. The other thing I'm going to look for is to see if price does give us a steep push down. Then I'm going to be looking for some type of flag here, a smaller consolidation area, a flag, to see if we can get some movement to the downside like this. Now, if price breaks this area here, let me grab my paintbrush again. So we'll skip. Price just somehow breaks this channel that we've been in. More than likely, we'll get a much bigger drawn out flag here before price continues to correct lower. Now, this is a bit on the extreme side, okay? I don't know if price is going to do that this week. It could not. I'm open to anything. That's being a professional analyst at the end of the day. Is you have to be open to wherever price wants to go. Because the moment that you feel like you have to be right, like you have to know what the market's going to do, you've already lost. Your job is just to analyze the best that you can what price is doing at any given time. And then if you see any opportunity, do you want to participate or no? Right? Pretty straightforward, pretty simple. So I'm seeing a common trend. See how we're in this, this is called an ascending channel. Now, an ascending channel like this is a lot clearer if we had a point, like a high value area on this side, okay? Like if there was a bigger top. Let me grab some price action and then I'll throw it over here like this. Now, if we had price action like this on the top side where we got this steep rejection and price continued downwards like this for a much longer period of time. And this is just an example. Okay, price continues downwards, and now we're getting this channel all the way back up top to where we're just barely breaking above this last high. Then this would fall into different category trades for me, right? This would be a trade that I would be willing to take 9 out of 10 times. However, since gold is in unknown territory, we have to just kind of proceed with caution when we're in these types of areas. That's why I'm saying you have to be open to whatever it's giving you and then just trade the best that you can, you know. So inside of this for me, I love that we're having like a channel coming into the top of the channel. Something I'm going to look at here, see if price does push up, how it reacts to this little spot. And that's about as much as I can do on the 4 hour. Now, besides that, there's other areas of interest I'm going to keep in my mind, like this here, this one here, and then there's some other areas like the further down we go, right? So there's some points of interest for targets. Now, each of these targets, it's not like price has to come and collect any of these targets. It's all about how price is getting to each one of these targets would determine how I look to take gold for the rest of the time, right? So if price correctively gets to here and then pushes back up, then like I know I'd be willing to take some more highs up into this area, okay? Or if gold smashes all the way through, breaks that, and now we start to get some type of correction in this area, then my next targets would be down here, right? And then once I see it giving us that correction, more than likely, I would leave this one as a pit stop, as a conservative take profit. So this would be like take profit 1 for me, and then this one would be take profit 2. Now, I have another term for these. It's not just your take profit. I use those, but this is called your, as our famous trader Corey says, our liquid zone, which is kind of catching on for me. I used to call it liquidity, but I kind of like liquid zone. It's kind of catching on. So these are some liquid zones that I'm just going to be keeping an eye out on, right? To see how price approaches them. Then, depending on how price is approaching those areas, determines how I'm going to be trading into those areas. So here's our other liquid zone. I also time frame these. So I've spotted these on the 4 hour. Okay, so something I'm going to do, I'm going to pop back in here, because it's important to know what time frame you're spotting these things on. You can't just leave the thing and not know what you spotted it on. So this is a 4 hour. I'm going to keep these bottom ones a 4 hour, and then watch what I do for the top part. This one's going to become a 1 hour, right? Because it's a little bit closer to where price actually is. So price could fulfill this within a couple hours. So I'm going to keep that within a 1 hour. And these down here, I'm going to keep within my 4 hour time frame. Now this one's going to be a shorter liquidity zone, or liquid zone. And I'm going to label this one a 15 minute. And this one is also going to become a 15 minute liquid zone. Now, the liquid zones are just areas of price where prices come, price no longer could stay in that area and immediately push back up, and it never came back down, right? So when price pushed up here, let's grab our highlighter, price pushes up here, comes back down, and then it fails to grab this low and instead just continues higher. So now that's an area of interest for me. Now, same thing here. This one's not quite one just yet because we haven't gotten a break of this. So this will be an area where I want to see if it grabs, then pushes up, gives us a flag like so before continuing higher. But if it doesn't grab it for whatever reason and then just continues higher, then this now becomes the liquid zone as well. So that's just a quick little insight of how I'm finding those. Now this is all I'm going to do on my 4 hour time frame. I'm also going to put this on here. I'm going to put 4 hour ascending channel. Same thing. These are land markers. You always want to know where you're at, what price is doing, how to get there, where did you spot it. Because as you start to dive into all your different time frames, you'll lose sight of the bigger picture. We always want to keep our bigger picture in mind. Now this one's going to be our daily trend here, and then that'll be my reference for our top part as well. Okay, so let's go ahead. We're going to drop down into our 1 hour time frame now, and I'm really liking how price has kind of been moving here, like so. Or just at the bottom of this. That's a good liquidity zone there. I bet when price comes down, it doesn't even bother about that one. It comes for that right there. So I'm curious to see what it does. We're on our trend line, and now we're also on our third touch of our trend line. So we either get a rejection here or we get some type of breakdown. I'd be curious to see if we get any shorts this week. Price was moving very correctively up top, like this. And by, again, corrective, small candles, very minimal price action, no major moves, no giant candles within it. It's just slowly reaching up top. It misses the top of our thing, but it doesn't have to hit it. It's fine. That was pretty close. And we get this massive push down. Now, this push down, if I remember, was like from the top of the break of our channel to here was like 400 pips. Crazy. Because this doesn't look like a 400 pip move, but because gold is so high up right now, the way that the pips look are massively drastic. Again, as we drop down into another lower time frame, you're being able to see this corrective price action a lot clearer, like this. And then we're going to check our 15. Boom. I'm not a massive fan. Like, when I see price like this here, it's not giving me a whole lot, right? So I don't like to jump into positions just because we're moving downwards here because of this. Like, it's not very often you're gonna see price just kind of trickle. I'm gonna look at the 5-minute time frame to see if this is some sort of like descending channel here, to see if we could get that drop down into this area and then see how it reacts, because I've seen price drop down, immediately push back up, give us some sort of flag, and then continue higher many times, giving us something like this before continuing up. So I'm curious if this is some type of descending channel. We're gonna look in just a moment and see. Dropping down to our 5-minute time frame now. On our 5-minute, things are still not very clear. Sometimes what I like to do if I'm having a hard time like seeing the market, I'll just invert the chart and see if something is a little more clear at top. Same thing, price is just moving so correctively, even in this bit. Nothing that I can really see. And in moments like this, it's so important that you have a system and a plan to follow. Because if you don't have a system and a plan to follow, then you don't have any strict criteria there in place for you to know, like, hey, it's not really giving me anything that I want to see. I'm just going to stay out of the market and wait for something clear. Because the thing about the market is there's always going to be opportunities there. You don't have to force your hand. You don't always have to be risking capital. You don't always have to be putting money on the table. You know, there's a difference between a plus setup and a C plus setup. You know, if you're finding yourself taking too many C and D plus setups, then you're going to be lowering your mental capacity for when high probability or A plus setups come along or come down the road. So I want to make sure that my mental capital is free from not taking a bunch of clutter. And this is just one of those things I'm willing to stay more patient on, instead of like, oh, I have to be trading. You know, what's that saying? Don't mistake running in place for progress, right? Just because you're moving doesn't mean you're making progress. And I find that a lot inside of the trading industry itself, is like people equate like taking a bunch of trades or actively trading every single day is going to be what makes you successful inside of the market. Instead, it's the opposite. You know, if you're willing to wait for your setup, not a professional hedge fund manager isn't coming to the market every single day trying to find something, right? Instead, they wait for the setup that they want. They determine if it's within their plan. They have a set amount of capital they want to risk per trade, and then they just enter the trade. They don't even have to question like, oh, is this going to work out? Where do I need to take my profit? Where's a good time for me to exit? Should I exit the trade now? Those are low quality questions to be asking when you're already inside of a position. You want that stuff figured out ever before you enter the market. So in gold, I'm curious to see what we get inside of this area. I would be okay waiting for that first push down. Like when I'm in areas like this, like I want the market to show me what it wants to do. I want it to push down, and then as soon as it pushes down, I'm okay taking that first little flag out of this area lower. Because even that move, if it's a 150 pip move, a 200 pip move, that's plenty. There, as you just saw, this one move right here was 400 pips just outside of this ascending channel. So we're just going to be monitoring what gold wants to do this week. It could continue to push higher. It looks like it maybe wants to go lower first. Again, that was a strong daily close. Like we closed below 1, 2, 3, the past previous 3 days. As you just saw, we just got our market open, and we gapped higher. Prime example. So it looks like we went ahead and pushed up higher there. You can see that gap on the 15-minute. And again, areas like this, you don't want to be trading. Like, why are you taking a trade inside of here? There's no reason. There's no information being presented, and yet you're going to see people want to enter into the position just because they want to trade. All right, let's go ahead and move on to silver. Silver absolutely crushed this past week. Silver is not something I'm trading at the moment, but it's something I'm going to be looking to move into like one of my top pairs. Now on silver, same thing. We'd have to start off on our higher time frame. Okay, higher time frame. Where are we at in the past bit of data? So price is in a now support and resistance isn't something I'm like I swear by, but it's good to know where you're at, right? Support and resistance holds true in certain areas, but it's not something I'm gonna live and die by. So as we drag it over, look where we're at inside of our support and resistance. What type of pattern are we currently making inside of our support and resistance? This is the type of pattern where we could go ahead and get a major move back up on silver. So I'm curious to see what we get. I'm going to take some of this off for you as well, since I'm marking the chart up. There, like so. So I definitely don't see silver tanking. Again, we're going to scroll over, see if there's anything of value on this side. No liquid zone, as Corey says. See one right here. And I mean, seriously, just one there. And then I see one here. And that's it. So now we're just going to scroll over and see where price is at. So yeah, price already tapped into that area. Let me minimize this. Now this is, again, that channel that I just showed you on gold, okay? Now, I love the way that price is forming here, like this, because this is kind of like a channel within a channel, okay? So you have a first leg here, second leg here, and now we're going to see if we get a rejection in this area to push back lower, right? But for most of the times like this, you might maybe get a little bit of a retrace, but now you'll get that continued push higher. So I'm just thinking silver is going to go ahead and continue to push up. So we're going to drop down into our 4-hour time frame now. There's a beautiful liquid zone there. Price just taps into it and retraces. These liquid zones are so crucial for any of the trading we do. Now this was a buying indication for us this past week, like this beautiful flag. And then not only did you get a flag, but I'm going to show you when I drop down into our 15-minute, there's a flag here that you would have taken your buy entry off of into this area. And as soon as it tapped in this area, you're out of the market and price drops back down. Quick and simple play. There's also a trade here, and then I think there was a nice liquid zone in the spot too. So let's go ahead and check those out further. Let's drop down to our 1 hour. And now you're starting to see that flag a lot better, okay? There's the top part of the flag like this. Beautiful, beautiful, beautiful flag, like so. Push just above outside of this trend here. Breaks just above it, gives us our second flag, entry just above, and you're taking this all the way up into our liquid zone for your take profit. Now this push back in is interesting to me. It was a solid push back into price. I'm gonna see on a lower time frame if there's anything of interest, but if not, I'm not really too worried about it. My only point of interest that I do have on silver right now is this one, this one, and this one. So those are 3 areas of interest for me. I don't think this falls as an area of interest yet, but again, I'm saying this, but I don't think this is an area of interest for me yet, but I'll be able to tell when I get into a lower time frame. We're just going to go ahead and drop straight down to our 15, and when I get into my 15, there's actually an area of interest right there. So if we do get any further downside on silver, I'm going to be seeing how price reacts getting into this area, like so. See if we get a rejection up. And if we get a rejection upwards, I'm definitely going to be keeping that long bias on silver. So that's my outlook on silver. It's not in an area I want to take anything on. Let's go into our next pair. So we've been monitoring the dollar, especially if you're trading instruments that are correlated with the dollar. You always want to keep an eye on it. So this is our daily time frame. Now on the daily, I talked about this last week, and it looks like it's about to play out true. We had a beautiful ascending. Remember the channel I just showed you? Slow corrective price action in a channel, reaches a significant high value area, taps into the high value area, you get a rejection. Now, when price rejects from this trend line, what type of rejection are you typically getting? Well, you're typically getting this type of rejection here. You're getting a steeper rejection. Even this, that was a steeper rejection. Even this, that's a steep rejection. But we never got that. Instead, we got slow corrective price action into corrective price action, which typically means we might get a continuation to the top side. Not a push lower, but instead a continued high. So it's something interesting. So that's what I was paying attention to this past week, was when I saw this right here, and then price pushed up, and then it was going lower. I was like, oh, this is interesting. I wonder if we get instead more of like a bigger flag here like this, push up higher, little flag up here, and then we continue to make highs with the dollar. So I'm curious to see what we get with the dollar. The only reason I'd be looking for anything lower is if we do break this low down here, right? I want to see a clear break, because there's infinite potential once you get that. Being patient for what you want to see, name of the game. I was doing a markup on the 30-year bond this past week, which played out beautifully here into our liquid zone. Boop. Like so, taps into it, price drops. So this was a position on the 30-year bond market that played out nicely. I was just kind of getting an eye out on oil. Oil's kind of in that area too. It's looking like it's going to go ahead and continue to drop. And since it is, it's probably going to go down to 69.32 next. And then an area of interest after that is going to be 68.58. So 69.32 potentially downside for oil. US 30, the markets have been cranking. I'm curious to see what happens over the next couple years with our US 30 and NAS 100, because of what these markets are shaped around, right? So you got to understand that these are the top 30 companies for US 30, NAS 100. You're looking at the top 100 companies, and then you have your S&P 500, right? So your S&P 500 is your top 500 companies. So when I'm keeping that in mind, what are the top 30, top 100, top 500 companies going to be based around? Well, a lot of it's going to be around tech, AI, all these like new industries and spaces that we're kind of just tapping into, which could mean that like we just continue to get higher highs, higher highs, higher highs, not any type of retracement. I'm just interested to see what's going to happen. I know eventually, like, we'll have some type of pullback. Now, when that pullback is, I don't know. But as long as you're in the market, keep trading this thing. We are on the 1 hour, 15 minute now. Price is kind of correctively reaching into this high value area, like I just talked about. I'm not sure what it's going to do inside of this area, but I don't really trade these enough to be giving like great advice on them. But price action is price action, right? I can look at a chart and tell us, like on a higher time frame, we just broke outside of this flag. Typically, that means on our daily time frame, we're going to continue to get higher highs, getting new all-time highs on NAS 100. Bitcoin's kind of giving us that price action, is giving us like a consolidation right here. But look what happened. It gave us our last consolidation as well here. Look, nice flag, push higher, and now we're getting the start of a flag. So we could get a much bigger flag here, like this. Kind of, let me grab my highlighter. Like so, maybe getting a little bit lower, pushing up, getting a little bit lower, pushing up, and then we get a much bigger drawn out flag before making new highs on Bitcoin as well. Let's check out Ethereum. Ethereum doing the same thing. I'm not a big fan of price action like this. Whenever I see stuff like this, no thanks, I'm not in it. It has to be very clear price action for me to be participating. I'm saying very clear, but like there's actually price action for me to trade so that I can make an informed decision to see if I want to enter a position. Is it worth risking capital on or not? Euro USD, I'm going to be long on potentially 1, 2, 3 in their area up top, like so. So US30 or Euro USD rejected perfectly off of this. Now I have a separate broker account just for Forex that I trade. And now whenever I do trade Forex, I'm only looking at long-term positions. I'm not like trying to be in and out in a day on Forex. I'm looking for like long-term holds whenever I'm entering the Forex market. So curious on Euro USD, because on this last bit we were pushing lower here. Okay, that was your channel down. Price broke above here, pushes back lower, fails to break this low, goes back, makes a new higher low, and now we're going up top again. Now on Forex, I don't care if I have the best entry or not. I'm just swing trading on Forex. So maybe we get some pushes higher on Euro USD, and then same thing on GBP USD. If we look over here, there's that liquid zone I was telling you about. There, boom, price taps into it perfectly over here. And I mean taps into it perfectly. Hovers for a second, and now we're off to the races. Same thought process here. I'm looking at our downward movement, price just breaking back above. If we do get some retracement, where's some area of interest, wait for some areas of interest, and then continue higher. But again, on my other account, like I don't really pay attention to best entry. I'm just swing trading those and just closing out after like a couple weeks and then taking my profits. So there's our markets for the week. Again, back on gold. We'll just see where price is kind of settling up. I'd love to see some lows into gold, but for me to look to potentially participate inside of gold, I want to see a clear breakdown below first, like this, give us a flag, and then I would look to take targets down here, and then after this, get a much bigger drawn out flag like this, and then look for some more lows down in this area. So there's XAUUSD and some other pairs. Hopefully everyone has a wonderful trading week. Don't forget, that when you're going to enter the market, make sure that you are journaling your trades and logging your information, because what you don't track, you can't measure. And what you don't measure, there's no way that you can grow. And that's the whole point of this in the first place. Don't just come to the market, haphazardly take trades, not have a rhyme or reason, and then especially not journaling on top of it, because how do you know if you're moving forward or not? Keep your headspace clear, have a clear trading plan, and execute when the time is right. Until next time, everyone have a wonderful rest of your week, and hope you're very prosperous. Peace.